Joining me now to discuss this development and much more, I have the Chief Executive Officer of Finance with Mukta Mohammed. Good to have you on the breakfast show this morning.
Good morning, David.
In the long term now, how do you think the CBN is going to maneuver any new developments with regards to the interventions we've seen over time, just trying to keep the Naira stable? Remember, the IMF has also said the Naira needs further devaluation as much as about 18.5%. That's, at this point in time, it's overvalued. Do you share in that sentiment?
Well, when you look at our external reserve, then you could share in that value, because that means we are definitely have to intervene to keep our currency stable.
Afloat.
So that's the challenge. And for me, the CBN have been trying using administrative procedures like the dollar to Naira. So indirectly have devalued the currency, because if you say the official window rate is 412, and then you add the 5 Naira to it that we're giving for every dollar, that's 417 for the dollar already to the Naira exchange. And in the parallel market, you have 480, 485, and 490.
It's 495,
some
barely a few hours ago.
So there's the challenge that the CBN is grappling with. Now, how can they address the challenge? They've tried to come up with their own. I think what the CBN should be doing now is begin to look at the banks also. The banks should need to come up with a product that will attract diaspora funding. This is the CBN own policy. What is the bank going to do? The CBN needs to liaise with the bank and begin to see how the bank can develop product. Because if you look at the, as far as March 11, we're made to understand that our exchange, our foreign reserve was depreciated by about 1-point-something billion. We were about 34-point-something billion. But as today, there was an addition of 404 million, and the CBN attributes that to their Naira to dollar policy. So it shows that if we come out with a policy that will attract diaspora investment or diaspora funding to Nigeria, that will definitely help in the draft. But that is just a short-term measure. It cannot keep it stable. We need to begin to see how we can attract foreign direct investment through trades. Now, not just through portfolio investment, that has been what has been all the things. So immediately we have the oil volatility, you begin to see the crisis stepping in that area. You see the foreign investor, the portfolio investors begin to leave the country. But if we have trade policy that makes trade between Nigerians and other countries, and then the greenback is the medium of exchange, then you begin to attract that foreign exchange into the Nigerian market. That also will happen. That's why the minister, the managing director for the World Trade Organization is saying that, look, Nigeria have to come up with trade policies that are not discriminatory to other people bringing in, like we ban importation of a lot of products. That is not giving room for free trade. So all these are part of the measures that the CBN need to address. Not just the CBN. You know, when it comes to trade, it's not just the CBN policy. It has to be the monetary side, the physical side also have to come in.
Now, do you think we are playing lip service to the term unification of our exchange rates, or we are stifled and cannot necessarily pursue this aggressively? What do you think is the picture we have?
I don't think we are playing lip service. We cannot just pursue it aggressively because of our reserve is down, because no central bank leave their country to just the currency to just afloat. Definitely there will be intervention. So we are looking at how much can we intervene. The good news now is that we're having a buffer in terms of the exchange rate, in terms of the crude oil price. From $40, we are averaging about 60, so we have a buffer about 20.
20 thereabouts.
So that, but now we are not seeing that effect of that buffer because of the backlog of that the CBN need to do.
Well over about $2 billion.
$2 billion. So that's why they are trying to clear up, and more are still coming in also. So until they're able to stabilize, we will see that. I think that's what the CBN is working at. They are looking at, there is a chance that we can definitely be able to maintain our exchange rate at 400, 420. But like you said, the World Bank, and then we need to forget that the IMF also is holding onto a loan facility that is supposed to give us to the tune of 1.5 billion, because they say until we achieve exchange rate unification, they will not release those funds to us.
And how critical is it now, going back to the concern raised by the World Trade Organization at this point in time? It's concerned about how we're using our foreign exchange to support manufacturing, export and import into the country. You highlighted that in passing. But with the forecast that we're expecting our reserves to hit as much as $42 billion, do you think we've learned any lessons from that and are slowly propagating that agenda of ensuring that we have Forex go to strategic sectors of the economy that will fuel our recovery? Because on one hand, some analysts think we are not just pushing enough, we are not tactical enough, we're not strategic enough.
I agree with that. We're not strategic enough because we are not even looking at our competitive advantage. We just tend to push Forex anyhow into the market just to stabilize. We give Forex for frivolous issues for importation of goods that should be locally produced. Your CBN is trying to do a lot of that, but they've still not been able to achieve that because people can still access Forex. And most Nigerians are also inclined to these foreign goods. So it's not just the CBN, it's not just the government. Also Nigerians as individuals also are not helping in that regard. Because even if you ban the importation of some product, you did not ban them to access Forex. And they're able to access Forex. And when they bring it to the market, there's always people that are ready to buy those foreign goods comparable to it. They will tell you that in terms of the way the goods are being produced, they look at it that the foreign goods are better off than the Nigerian good. So those are part of the things that the CBN need to do. Now, we are intervening in some sector, trying to build our manufacturing, but we are not building capacity. The capacity has to come in terms of manpower. The reason whereby we intervene and then we have to bring expatriates and still pay them in this foreign currency does not also help our economy. So whichever way we are doing, we need to look at our people as an asset to build our economy. As we are developing policies that try to encourage the manufacturing sector, we should also think of how we can build capacity so that those capacity will be internally driven in terms of salaries, allowances, and others. So and then the most thing, like I said, is to be able to attract investors into Nigeria. Now, these investors doesn't have to, portfolio investors are good, they can come, but like we always say, they come for the hot money. We need foreign direct investors. And now, this government has made it a little bit easier. We have the Diaspora Commission. So it's now time for Nigerian business, especially the banks, to begin to liaise with the Diaspora Commission to see product that they can bring in and attract investment. Because what we've seen in diaspora funding is that we've only seen investment come in terms of for upkeep. Then the only thing you see investment they do is in the area of real estate, and it's not even in a large quantity, and they do some of this investment through third parties, and so those money do not find their way into the treasury to help us boost our reserve. So those are part of the thing the banks should be looking at, trying to develop product that will attract Nigeria in the diaspora, and also the government should begin to look at this trade policy to attract trade within Nigerians and foreign companies to attract this foreign. Now, our major means of income is oil. We do nothing with it than just export the crude and get back there. Then we import refined product. That also is putting a lot of pressure on our currency. So by the time we're able to address that issue of the importation of petroleum products with the coming up of maybe modular refinery, but now the government is so excited about the coming of Dangote refinery. Once those refinery come into, you see that the pressure on the naira will reduce, because that means there will not be so much importation in terms of because when you look at what the Nigerian Bureau of Statistics was saying, maybe in their latest report shows that the pressure in terms of import of goods and services were in the petroleum sector lead than in the area of importation of cars to Nigeria. Those are the main key that drive.
And talking about the pressure for demand for Forex at this point in time now, if you speak with those within the aviation sector, they are lamenting as to the level of scarcity. I still say it's perceived scarcity, but they will tell you that that's the reality on ground. So for so many operational costs across key sectors of the economy, this is stifling. So all of the projections we are making only just make sense in paper, but in reality does translate to nothing. Do you think we can have any recovery Q2, Q3, maximum by Q4, a stronger bounce back beyond the 0.11%?
I think we will. We will if oil price currently remains on the upside. I keep saying that Nigerian GDP is driven by oil price. So if oil price continue to remain on the upside, then we could see that. But if oil price has any external shock, we might be back to
well, we'll just keep our fingers crossed and hope that we see stronger vaccine deployment, lockdowns also eased, and then we come back gradually to pre-COVID-19 levels and have our global economy also bounce back. Because if the global economy is not stable, then our internal systems cannot also necessarily work, because we're surrounded by so many indices that define whether or not we will succeed. Thank you very much for your time on The Breakfast Show this morning. Mukhtar Mohammed, it's been a pleasure speaking with you.